Welcome back to the Market Matrix. Today we're going to speak about a chart pattern called the diamond top. So we spoke about the diamond bottom, where we had a stock that came down, and then it started forming this thing where it was like this, and we had no idea what's going on up until we were able to draw out the diamond shape of the price action on the bottom. And then we had the up move. So in this case, we're going to basically expect the opposite. So let's get into it and we'll see what's going on as we go. So we have the stock that's running up, and then it starts finding some trouble. You could start telling from over here, okay, sellers started to step in a little bit, but it's not enough for us to say that this thing is going to go down. Maybe it's just some consolidation, maybe it's some profit taking before continuing higher and keeping on going. So we got to sit out and wait and see what happens. So we start to see this over here, this long wick over here. And when we spoke about wicks, what did they mean is that the price reached all the way up here, hit a high up here, and then came back down to close somewhere over here. So stock keeps moving on, rejects over here, fails to break this high, and then it starts coming down. So let's see what happens after that. Stock breaks into a new high, stock breaks into a new low, and when I say new high and low, I mean of this range over here, the range where it's consolidating and we're trying to figure out what's going on. I don't mean high and low as in the low over here, because this is the up move we had. So right now the pattern sort of starts forming over here. This is just the initial buildup of momentum before the pattern sort of forms itself, even though this is part of the pattern. So this tells us it came from an up move. So buyers were strong over here. Buyers were stepping in over here. And now what we see over here is this might be topping out. At this point, it's safe to assume that this might be topping out. It might. Maybe it continues and breaks this high. We don't know. But we see that it started having trouble a little bit over here. Again, maybe this is consolidation. We see it broke higher. It didn't break down right away. We had this right here. Sellers started to step in, broke into a new high. So we could see after every high it breaks, sellers start to step in a little bit. So over here, we can maybe create a thesis that, okay, maybe some people are taking profits over here. We start seeing bigger red candles. We start seeing rejections. We start seeing the wicks over here on the upside. So this is rejecting higher prices. So again, we don't want to go into the markets making any assumptions of where the market is going to go, in the sense that we become biased. We don't want that to happen. So what we do want is to see what's going on and formulate an idea of what may happen next. What is the probability? How can I position myself to enter a trade that'll play out in my favor, probability wise? Because again, at the end of the day, the market is the market. The market is always right. So you can't go into a trade and say there's 100% chance that just because I see a double bottom, the stock is going to go up. Keep that in mind. The market is always right. And there's never 100% chance in anything in life. There's always risk to be assumed. So let's continue on with this pattern. We have this going on and we see this. The diamond bottom is now formed. But let's just get into it really quick. The stock runs up. New high, new high, new high. Over here, it failed to break that high. But what we start seeing is these wicks on the upper side. And we see wicks on the downside. So we see, okay, buyers and sellers are starting to fight it out. We see it over here sort of having this broadening top formation. Remember, when we spoke about a broadening top, the stock had an up move. And then the price range started getting wider than it was over here, which is what we see over here. Price is getting wider, wider, wider. And then it starts getting tighter and tighter and tighter. And what does that give it? The look of a diamond. That's the look of a diamond over there. A diamond shape consists of something like this. So that is the look that we get. And over here, we see the diamond top formed. Again, diamond bottom. The diamond shape was just on the bottom of the stock. And diamond top is just the inverse. Comes from an up move, and we see the diamond on the top. So the measured move that we should expect is going to be from the highest point of this diamond up to the lowest point. So we have the highest point up here and the lowest point up here. And again, it's not always going to be perfect where the highest point is right here and you draw a straight line down and the lowest point over there. The stock market a lot of times is not perfect. It is, a high might be, one of the points might be a little bit to the right, a little bit to the left, a little bit higher, a little bit lower. The price might be within a range. The support might not be at 1. The support might be ranging from 98 cents to $1.07. So you just want to know, okay, here's the high and over here is about the low. So we take that move and we measure it. Now, where we're going to put that move is once we get the break. So if we get the break over here, if this candle were to close like this, Then we put that break over here and we just drag it on. This same move over here, we put it over here. If we get the break all the way here at the tippy end of the diamond, then we should expect to move from here up to here. So let us see what happens. We get that break over here, and what do we see? We see this rejection candle right here. We see it broke this diamond, and you see this wick over here. What this wick shows us is that the buyers at some point within the formation of this candle, so let's say this is a 5-minute candle, within this 5 minutes of price action, the buyers tried to step in. They stepped in at some point, sent the price all the way up here, breaking it above this, but failed to close it above this or even within this diamond formation. Over here, look, they broke it above it, but sellers came and closed it below it. Over here, broke it above it, but it closed below it, Over here, we see it tried, failed, and it closed way below this trend support over here. Again, this is the trend support I'm talking about, because over here, this is acting as support, while it's trending up over here, trending down over here, trend resistance, trend support, it's squeezing tighter, and this looks as if it's a pennant over here. So first we see it looks like a broadening top, and then it looks like the triangle of a pennant. So you put those two together, you get that diamond look, boom. We get that break over here. That's where we want to enter for a short trade. Now somebody asked me the other day, okay, what do you mean ride the wave? Why would you want to ride the wave down? Now you ride the wave down, when I say that, I mean through a bearish trade, whether it's through put options or through shorting the stock. Remember, you can make money when the stocks go up. You can make money when the stocks go down. You could even make money when the stocks is going sideways. And we'll get into those later on. But for now, we know that you can make money going up, going down. So once this breaks over here, we want to enter a short trade. And now once we enter that short trade, we measured the move already. So when we measured the move, we already have an idea of where we can expect the stock to maybe go. So over here was the measured move. That same measured move, you could see these lines over here. Why I didn't draw this measured move over here is just so you can see the candles. I drew it over here instead because the break was at the same level over here. And you'll be able to ride that wave all the way down over here. Now again, let's say the price reverses over here, or let's say even you see this wick over here, the buyers step in over here, and you entered the trade over here. Buyers step in over here, and you see aggressive buying over here. Now even if the stock comes back up here, and you can tell from your indicators, maybe you're looking at the MACD, RSI, you're looking at volume, aggressive buying is taking place, and you see it coming back up here, maybe into the triangle, or even above the triangle. At this point, even over here, if it goes down and comes back up, you're even on the trade. If you're in stock, you are even on the trade. If you entered over here, broke down, came back up here, you're even on the trade. If you're in options, you're either even, maybe at a small loss, maybe at a small profit. But it's safe to say that, okay, let's say it comes down over here, and it doesn't continue lower and have its full measured move. That's okay. That happens a lot. Like we explained previously, the market is always right. So even though you have this measured move over here, okay, cool, it's good to expect that, but also you needed to adapt when the market does its thing. So over here, all we see with this green candle is we don't see any aggressive buying just yet. What we see is that, okay, maybe shorts who entered over here, people who were shorting the stock, decided to take their profit, so the stock bounced a little bit. But what we see over here, again, is the same rejection over here. You see this wick over here, the price tried to go up, rejected, and continued lower. So you just need to watch out and see what you're looking for, and know that at any given point, anything can happen. But if you know where to enter, if you know the measured move to expect, then you'll have the odds sort of more in your favor of you knowing how to adapt rather than knowing what the market is going to do. Because again, at any given point, some people may know what the market is going to do because they move the market, but at the end of the day, you want to adapt with what the market is giving you. So I hope this video was helpful to you, and I hope you stay for the next videos that we speak about and all the other educational content that we will have. Thank you again.